let's now move on to alternative investing. Why investors are increasing their exposure to alternatives and what you should be considering. Chris Andrews is the Chief Executive of Latrobe Financial. He joins us now. Chris, welcome. Good to see you here on AusBiz. So, exposure to alternatives. What's the advantage? Why are investors seeking that?
Hello, Andrew. Great to be with you. Look, it's pretty straightforward for investors. Investors are interested in anything that will add to their portfolios, that will help them produce better returns. And it stands to reason that alternative investments should be part of that mix. You know, the big global institutional investors have 25 to even up to 50% of their portfolios exposed to alternative investments. And when you think about that in an Australian context, we have just over 2,000 businesses listed on the Australian Stock Exchange, but there are 2.5 million active businesses in the country. So it stands to reason that there are some wonderful investment opportunities sitting outside public markets, and it's those types of investment that alternative investments is targeted at.
So given the returns you're likely to get from equities compared with alternatives, what's the attraction? What can you expect?
Well, very often alternative investments will produce equity-like returns, often with lower volatility, Andrew, which is one of their real attractive qualities. But I will say, not all alternative investments are alike. Like a traditional investment, whether it's in a share or whether it's in a share market fund, investors do need to be very clear about what they are investing in, the role that investment will play in their overall portfolio and its benefits to the portfolio, whether that be diversification, whether that be a source of income, whether that be a source of longer term capital growth. And each alternative investment needs to be assessed on its own merits. So in that way, whilst there is a lot of hype around alternative investments, it's very important that investors bring the same disciplines that they would to any traditional investment.
So, Chris, what should investors consider? And I guess when they're at Latrobe, how you actually put together a portfolio that would include alternatives?
Yeah, so we've had over 7 decades in the space, Andrew. So we're a little bit of an outlier. We've had a very long time to refine and adapt our approach to investing in private markets. And, our Australian real estate private credit strategies have been available to investors for many decades. So that's one thing. What investors need to think about, though, when they're investing, I'll just go back again, the same fundamental principles they'd think about for any investment. So think about the long-term track record and expertise of the manager. Think about the quality of the assets and the type of assets going into the portfolios. And most importantly, focus on the transparency that you get from managers as to what's going on under the hood. And that has been an area where in some parts the alternative space is still on a journey of improvement.
So, Chris, what are you seeing at the moment? Perhaps thematics, tailwinds, where you can take advantage of that in alternatives?
So we're deploying about $1 billion a month into our Australian real estate private credit strategies, Andrew. So we're seeing a terrific amount of demand from investors. These alternative investments, this type of capital has the ability to capture sort of macro tailwinds in a really effective and flexible way. And if I give a couple of examples, we, through our real estate private credit strategies, have been investing in housing supply for many, many decades. What are we now seeing? We're now seeing that housing supply seems to be one of the biggest, most pressing issues facing the Australian economy, and in our view will be for some decades to come. Likewise, we've got a US corporate private credit strategy in market now, targeting loans to mid-market borrowers. That, of course, is capturing the really big tailwind of the rebuilding of the US mid-market, middle America, that part of America that really has been overlooked over the last 30 years. And if you think about it, that's almost the economic policy it's almost the only economic policy which has bipartisan support in the US. So you can see how these alternative strategies can plug into some of the really big tailwinds driving economics and driving investment outcomes for decades to come.
Perhaps, Chris, from a global perspective, have Australian investors been a little slow into this space? Where do you see this going locally, perhaps, in the next few years?
So Australian individual investors perhaps have been a little slower to the mark, Andrew, but the Future Fund, when you look across private equity, infrastructure, other type of alternative investments, has about 45% of its assets under management in alternatives. For Australian individual investors, that number sits at the moment between 5 and 7%. So over the next decade, we expect to see a significant uptick in individual Australians investing in alternative investments. And in fairness, there haven't been a whole swathe of vehicles by which individual investors could access this part of the market in previous years. So as we're seeing more managers come to the market, there are more and more ways for investors at an individual level to engage in the alternative story.